This current tax year ends in a couple of weeks, on the 5th of April to be precise. So in the UK, the tax year is from the 6th of April to the following 5th of April. So it's April to April. And for crypto, it's the same for everything. So whether you're paying income tax or you're paying capital gains tax, that's the time span, right? And in the UK, crypto tax is based around crypto assets, it's called, so it's capital gains, right? Now, that's if you don't trade, if you don't day trade. There are some requirements and some scenarios where your crypto is counted as income, right? So if, for instance, there was a fork in a blockchain and you received free tokens, that is not necessarily income. That is classed as capital gains. So it's a 2x capital gains in most cases. Again, it might be different, not tax advice. If you have to do something for the crypto, so if it's like a play to earn or staking or something like that, that is seen as income most of the time. Again, check it out with an expert or software that knows what's what. Or if you do a job and someone pays you in crypto, that's a clear income, right? But for price going up and down, you selling from one token to the other, that is classed as capital gains. Now, one of the biggest things or mistakes that people make is they sell tokens from crypto to crypto, don't realize that that's a taxable event. So they incur tax and then they just forget about it. And the tax year ends showing that they've gained money. Now, there are different scenarios where that could be a mistake. First of all, if the token that you've sold into has now gone down to the value you bought the original crypto as, and now you're in loss, but you haven't done anything about it, you haven't realized the loss. As far as the government is concerned, you have made a profit and the tax is still due. So let me give you an example. Let's say you buy Bitcoin at $100, right? And then Bitcoin goes to $200. You've made 100% profit in terms of capital gains. If you never sell the Bitcoin, you don't do anything about it in the tax year, even though you've gained $100 profit, no tax is due because you didn't sell, you just hodled, correct? Now, let's say you then figured in your head, I want to seal in this profit. I'm going to sell to Tether, but I'm going to hold Tether. You sell to Tether. At the end of the tax year, you have realized the gains and taxes are due. Government wants their percentage of that $100 and you have to pay it. Even though you only have crypto, you haven't gone to fiat, just the act of selling to another crypto, a stable coin, for instance, is seen as realizing gains. Now, this is the one that messes people up, selling from crypto to crypto that aren't even stable coins, right? So let's say, for instance, you then sell the Bitcoin for XRP, right? So the government now sees that as a transaction. They calculate your gains to be $100 like before, tax is payable. But let's say by the end of the tax year, XRP has crashed by 90%. The SEC has banned Ripple. Everyone's XRP has been burnt and it's crashed to zero. But you didn't do anything about it. You didn't sell the XRP. You're hodling for AMMs. You still have to pay the tax, but now you don't have the money because actually you're in deep minus, right? Your portfolio is now worth $10. Okay, you haven't sold the XRP, you're hodling, right? But the government still wants their tax on the $100 for that tax year. And somehow you have to figure out how to pay it. In many cases, some people have now been forced to sell their XRP at that $10 and then go borrow money or find money from somewhere else, liquidate some of their assets just so that they can afford the tax. Now, you wonder why some people sell in bear markets. That is one of the crucial reasons why. Because they fail to look at their account and make sure that there's no tax burden that they're not going to be able to afford. Now, how do you know with cryptocurrencies that you might be in this situation? Well, at this time of year, just before the tax year is over, something like a month before, a couple of weeks before, what I do is I look at my portfolio using software, tracks all of my wallets, It knows what I bought for when, what's down, and it tells me how much unrealized losses I have, unrealized gains, what the tax would be if I basically stayed at this point. And then I can make that decision to sell off some of the losers. I'm not selling them to get rid of them. I'm selling them to lock in the loss. So what I would normally do, not financial advice, not tax advice, is if I was in that situation, I would sell the XRP into Bitcoin. Hence, sealing, completing the circle, realizing the loss, and telling the government that in fact, I don't have any profits, right? I have no realized profits anymore because the loss has canceled it out. Now, depending on what jurisdiction you're in, you might be able to just buy back immediately. In some places, you have to wait 30 days. Sometimes you have to wait 30 minutes. It all depends where you are, okay? Now, if you go from one crypto to another crypto, then there's usually no restriction into what you can do, what time scale. That's seen as just buying crypto. So if I went to Bitcoin and then 5 minutes later went back to XRP because I believe XRP is about to pop, that is seen as sealing in the loss and realizing the loss, and that's fine. But if I went to USD or I went to British pounds, then I might have to wait for 30 days before I can buy back. Because if I just sold it and bought back, the amount of window hasn't elapsed yet for it to count as sealing in the losses. So I always avoid going into fiat. I always go into another crypto and then back again, because that's seen as actually trading that other crypto, because that other crypto is risky and that could have gone to zero before I was able to get back, right? So that's also seen as a risk. And when there's a risk, usually they're fine with you taking the risk and they don't count it as cheating or trying to game the system, right? Again, none of this is financial advice. None of this is tax advice. Seek a professional. But this is a way that you can potentially save yourself from paying tax in the bear market that's going to absolutely ruin you. Also, as we're going into the bull market, you don't want to have to be forced to sell your tokens just so you can pay tax and then the token moons, right? You don't want that. So we only have a couple of weeks left. This applies only to countries, of course, that their tax year resembles the UK. Obviously, wherever you are, you also have your tax year and you can do it closer to the threshold of your tax year. The term, I believe, in general industry is called tax loss harvesting or something like that. And you can do something similar in crypto. In fact, it's easier to do in crypto because we have software that can do it for you. If you need software to do this, the one I use is linked in the description. It's actually free to use, completely free. You can sign up for free. And for this particular purpose, you don't actually need to pay for anything because it just shows you what's what. You can take action based on that or not. You only pay if, say, you're actually trying to generate tax forms that you're going to send to the government. Then there's charges for each type of tax form. And it works in Australia, the UK, New Zealand, the United States, Canada. You just do a drop down, pick your country, and then it adjusts everything based on that. It's an affiliate link. So in the future, if you do end up buying one of those forms, they will send me a commission, and that's how it works. Anyway, not financial advice, do your own research and don't lose your money. All right, take care. Peace.